Hello. I'm in. Sometimes you have to wait a second just to say hello to know that you're live. How's it going? Yay! It's almost the holidays. Anyways, this is the last chat with Joanna for the year. Can you imagine the last chat with Joanna for the year? So I'll be taking the rest of the year off and enjoying the holidays, and I will see you guys next year. However, I wanted to go over a few things. So, those of you just joining me for the first time, this is Joanna Wright, founder of Bottom Line Wealth, helping entrepreneurs, realtors, and professionals build wealth in real estate and keep more of the money they make. So, today I wanted to address, and I wrote a little list here because there's multiple ways. And I wanted to, so I get asked this all the time because I do geek out on tax and legal stuff. However, I am not a CPA and not an attorney, so let's just disclose that right now. It's just something I have fun learning about. So I'm sharing my knowledge with you on that. I've been in real estate for over 20 years, so there's some things I've had to learn for my own purposes, for my own business, my own real estate transactions. And so I just pass them on to you. Okay. So some of the reasons people come to me as students, they're learning how to invest in real estate because they're looking for, first of all, they want to retire early through real estate investing. That's the number one reason. And they get to live whatever life they desire because they have the cash flow, the assets to protect them, right? So, but the other reason is tax savings. So when I started studying taxes, and I've trained tax preparers, so that's how much I studied it. I learned so much. And the number one thing I learned was being an entrepreneur and having real estate was the best, like, tax advantage loophole, rich get richer secret that I ever found. So this is how the rich get richer. And I have interviewed multimillionaires and billionaires, and their number one asset that they invest in is real estate. Now, of course, there's other assets you can do, but their number one was real estate. So I bring that to you because one of the tips on here involves real estate. So I'm bringing all of these tips to you, how to max save on the end of year taxes, because some of you need to get a tax break, right? So if you follow my plan long enough, you'll pay next to zero in taxes. Legally, ethically, it's just how everything's structured and done so that you're not, if you're W-2, you're paying way too much in taxes. So you need to be an entrepreneur just to save and have that advantage, right? And real estate on top of it, at least one house a year, is going to make you an amazing tax advantaged person. How's that? Without getting too far into it. But the first thing that you can do to save on taxes at the end of the year is make a huge charitable donation. Whatever you think is appropriate for your space, what you would like to donate, and talk with your CPA about the advantage of how much you should donate, right? Because that'll save you a lot right there. And what charity doesn't need some support, especially around the holidays, right? Charities are out there for good reason. So donate, and if you haven't already this year, then go ahead and make that donation. That'll help you out come time. Okay. Another way to defer your income would be through a 401k. So you can max on your 401k. And hopefully I'm talking to a lot of entrepreneurs out there. If you don't have a 401k, you can set up a solo 401k, or you can open up an IRA, right? And some people might say, oh, well, I have an IRA already, and I've already maxed it out. Well, open up another one. There's no limit to how many you can open. And I suggest getting a Roth IRA. And some of you might be saying, I make too much money. I can't get a Roth IRA, Joanna. Well, go get a traditional and then roll it into a Roth. So there's all kinds of ways to maneuver this. So I would be happy to hear from you. If you have any questions, you can comment down below. But basically, jumping on a Roth IRA would be ideal because then you can use it for investments later. Okay. So, and you can control what it's being invested in. And number one is real estate. So that's where a lot of my money lenders are a part of. They use their retirement accounts to invest in real estate. And they do that because, so what money comes out of the retirement account goes back in plus their profits, right? So they're going to grow their retirement account. There's a whole strategy behind this. I'm just giving you that as an example. Okay. The other thing is an HSA. If you have life insurance or health insurance and you don't have a health savings account, I would get that and max that out. That's a good place to put money. And it helps you that it's basically just a savings account that you can spend on stuff that your insurance doesn't cover. Copays, prescriptions. It's a great way to get that max tax advantage. Okay. The other thing I have here is an estate setup. If you do not have your estate in order, I was actually just on the phone with a gentleman handling our estate. And basically, you can, first of all, I just keep going rewinding back in my head. First of all, you should never own real estate in your own name. Let's just start there. Second of all, if you have real estate and you have it in an LLC, great. Is that LLC in a trust? That's what I got to say. So if it's not, then you need to put it in a trust because then it's all subject to probate and hairy, scary state mandates. So you want to put that in a trust so they can't touch you. Anyways, so spending money on an estate is a huge 100% tax write-off. Okay. Ask your CPA. It's definitely something that you need to do, especially if you have any real estate whatsoever or any assets whatsoever. You do not want them having to go through probate. Okay. And then if you're looking to be a private money lender, that is a great way. So invest on something as little as you can either invest in someone's project they're doing now, or you can maybe invest in some land. Like there's cheap land to get a hold of that you could buy for like $5,000. I'm not saying you need hundreds of thousands of dollars to invest in real estate. You do 5, 10, 20, like you can go in that range too. So don't eliminate that. So if you're looking for a tax advantage, that's a super duper way to go. And that's another reason why, not just for retirement purposes, but that's another reason why people become private money investors, because it leverages their time, it leverages their money, it leverages their taxes, it leverages all the way around the board. So that's like the ultimate thing. And if you've ever seen a bank, that's their ultimate way of living. You know, you get banker's hours and you get the money and you get to charge for the money and you get to go invest with the money. So like that's the ultimate goal, is to be the banker, right? So being a private money investor is a great way to adjust your taxes, to defer your income. So I hope these were helpful. Let's just review them real quick without explanation. Charity would be the first one, right? I got them written out here. I'll just put them up here. So charity, go to your favorite charity. Invest in your 401k or IRA or Roth IRA. So there's Roth, SEP, or traditional. I'm encouraging you to do a Roth IRA. Check with your CPA. And if you already have one, open up multiple ones, right? Buy real estate. life insurance, I don't think I addressed that one. Whole life would be the ideal thing. So if you know an insurance person, go ahead and get the whole life insurance. That is another real estate advantage later, that can help you out with real estate. And did you know that you can also invest in real estate through your HSA account? Your HSA, your life insurance,